right, well, thanks all of you for showing up this morning for the presentation. It's an exciting time for Denarius Metals. We're a junior exploration and development company that was put together in 2021. We're focusing on high-grade polymetallic projects. We're looking at Spain and Colombia in particular. And it's exciting for us because we're actually on path to production with our first project in 2024. We focus on high-grade districts because we like to find areas where we've got a social license to operate, known history of exploitation and development, mineral resources, infrastructure. We've got a seasoned team that has a mine-building background leading the company. We certainly feel that ESG is an important part of our social license to operate. I've always said that ESG is part of our DNA, and certainly in Denarius Metals, we're living that as we're starting up our projects. We are positioned well in terms of balance sheet to take our project forward, and I'll take you through that in the next few slides. We've got a team of mine builders and mine finders. Serafino Iacono's had more decades than he'd like to admit, working on the resource space, raising money for new projects. He's put in production over 8 projects already to date. And certainly the production at Zancudo is the next number 9 mine that he's going to bring into production. We're listed on the Toronto Stock Venture Exchange as well as the OTCQX in the U.S. We've got 63 million shares outstanding, and after you take into account the shares that would be issued for the recently issued convertible debentures financing that we closed last week, and our warrants, we've got 165 million on a fully diluted basis. The converts are expected to be listed on the NEO exchange starting next February. They are an interesting product. We just closed that, as I said, last week, $20.6 million. It's a 12% coupon on those notes that we're going to pay on a monthly basis. They're convertible at 45 cents, so just above where we're currently trading, and add some of our sort of franchise financing magic to our convertible debenture. It also includes a gold premium that we'll start paying on a quarterly basis in year 2. The gold premium will be a bonus kicker in the interest rate, where we measure the spot price each quarter compared to an $1,800 US floor price, and we convert that into an incremental interest payment that we'll make each quarter. So for example, at $1,900 gold, you'd get a 5.6% gold kicker on your annualized rate. So we think this is another one of these interesting products, derivatives that's out there. It'll be trading, as I said, early next year. Market cap right now is low at 24 million, and when you look at the value of our projects individually and in aggregate, we certainly think that we're poised for a re-rating as we bring them into production. Management and the board have been one of the biggest backers of the financing of the company. Serafino Iacono himself owns about 17%, and Aris Mining continues to hold 16% interest in the company. And we've got a number of other institutions and retail holders rounding out the shareholder mix. Oops, how do we go back? There we go. As I mentioned on the rating side of it, we look at peers. We certainly believe that we're poised for re-rating, and I think Taylor, in his note that he issued last Friday after we'd announced the PEA results for Zancudo, got it right when he said that positive drill results and resource expansion at Lamero and the start of production at Zancudo could potentially drive a re-rating of our stock price, and that's exactly how we feel things are coming along for this company. So let me first take you through the near-term production that's coming from Zancudo in Colombia. Our team's been working in Colombia since 2005, and from 2010 to 2022, we ran Colombia's largest gold mine, which is the Segovia operations. We were also responsible for the Marmato operations, as well as the discovery of the deep zone at Marmato that Aris Mining is now working to develop. So we've got significant experience in Colombia, the know-how, the know-who to operate. We believe we're in the right jurisdiction. We're located in the Cauca Belt, 30 kilometers southwest of Medellin. Lots of good pedigree names to the north and south of us, including the former Continental Mine, now owned by Zijin Mining. You've got the Segovia operation about 240 kilometers away in the Antioquia district. You've got Gold Mining, who has territory right around our project and has recently announced a PEA for their project. And to the south, you've got the Marmato project that we know all too well. So lots of infrastructure, access to people, and a mining community for sure. And the Zancudo project itself has a rich history. It's been started operating about 250 years ago. First production in 1793, a couple million ounces gold equivalent having come out of that district. The mine itself at Zancudo, the Independencia mine, was known for financing the Colombian independence and shut down in 1945. It's a project that is welcomed by the community for coming back. We've got a well-documented video on YouTube running right now that gives you a bit of a sense of the community reaction to us announcing that we're going to be bringing this mine back into operation and how it's going to generate economic upturn for the local community that they feel they lost when the mine shut down in 1945. In 2010, when we were working with Gran Colombia, we first bought the mine, and in 2017 we optioned it to IAMGOLD to earn a 70% interest. They explored it for the next 5 years, and then unfortunately, as their focus got directed back to the challenges of bringing their Côté project into operation, they walked away from the earn-in agreement, leaving us with 100% of the project. And that was a terrific outcome for us because we always believed in the project, but it just never was at the right time for us to really put our effort into it. So the first thing we did when we got going was to work on quantifying a resource, putting the local team in place in 2022. We've got over 1,000 hectares in 4 concessions. We've since applied for the mining license, which will consolidate those 4 concessions, and we expect to have that in place by the end of the month. And then by the end of the year, we'll have the initial environmental license that we need so that we can start up operation next year. In the center of the map, you can see the pick and shovel. That's where the entranceway to the Independencia mine is located. At that site, we're currently already most of the way through the installation of the new crushing plant that we've been paying for with our cash resources this year. That's going to allow us to get into early stage mining next year. We're also building a bypass road that comes from that location straight down to the bottom of the map, almost where you see the word Medellin, and that's connecting us to the local highway and allowing us to bypass the communities. Titraby is actually one of the nicest small communities I've been to in Colombia, and so it's, again, an opportunity for us to support the local economy, bring jobs back to the area, and more importantly for us, create our next mine. Over the years, IAMGOLD and Gran Colombia had done about 40,000 meters of drilling, so first step we did was take that and build the resource. We quantified a resource with 1,060,000 gold equivalent ounces, 860,000 ounces of gold with 6.5 gram average grade, and more importantly, a huge silver resource, 14 million ounces of silver with 107 grams per ton. We've since charted the course for production, and we've got another 10,000 meter program starting in January of next year. Once we finish building out some new core shacks and infrastructure we'll need to support that plant. On the map to the right, the yellowy gold areas that are shaded is the location of where that resource is within the eastern side of the titles that we've got. The whitish area is where we plan to start drilling next, to drill the extensions to increase the size of that resource. And then the other areas that are dotted with white lines are areas that we've identified through geophysical work that will become part of the later exploration programs as we get to the next phases beyond that. Exploration is open in all areas, and our team's very excited that this could be as big as the next Marmato for us. At the end of October, we released the results of a preliminary economic study that was done on the project to help validate the economics that we see ahead of us, and it's fabulous. 3.5 million tons processed out of the 4.1 million tons of resource with a 4 gram cutoff. 6.77% grams per ton gold grade, 106 grams per ton silver. We're going to produce a concentrate, a gold-silver concentrate with 30 grams per ton gold and over 500 grams per ton of silver. And we've gone out to the off-takers. We've already got a contract in the works with one of the off-takers, international off-takers, that was successful with the indicative terms. So we know what we're going to get paid for this now. Over the 10-year life of the project, we see $1 billion of revenue on a net basis. And you can see in the chart on the lower right-hand side, that's over $100 million a year of revenue, of which we're converting about 26% of that into after-tax project cash flow, $266 million US. Net present value, 5% is $206 million, and I take that and compare that again to a $24 million market cap. There's tremendous value in this project, and with a low capital cost, because there's a mine that's already there that's got infrastructure inside it and a mine contractor that's paying for the development, we're only having to spend $15 million US to build this project because we're building the crusher, we're building the concentrate plant, and we're building the access road and tailing storage facility. Very limited investment, which is why you get a 287% IRR on this project. And this project starts production next year. With the next 9 minutes, I guess I got left, and some for Q&A, I'm going to take you through Spain. Spain's something we got into in April 2021 when we bought the Lomero Payados project in the southern part of Spain in the Iberian Pyrite Belt. It's home to the largest concentration of massive sulfides in the world. So if you're going to look for polymetallics, this is the place to be. It's got everything we need in terms of infrastructure, people, roads, access to port, and a rich history, again, of operating. You can see us sort of nestled right in the middle of at the top of the Iberian Pyrite Belt amongst a number of other producers, similar mineralization, and we've been networking with those producers to gain a lot of information and valuable insight into mining operations in the belt. We've got about 600 hectares of title sitting there between the Lomero Payados exploration license and the recently acquired Palmarejo exploration license. Both of those have about 3 years to run. We just renewed them at the beginning of this year. We're 10 kilometers away from the Matsa Aguatinitas project. It's a producer that does a couple million tons a year of production. It's been in operation since 2009 and is down over 800 meters in terms of operation. And then just 3 kilometers to the west of us is the dormant San Telmo mine as well. So again, we're in the right neck of the woods. The little purple outline you can see right under the word Lomero there, that's the location of the former mining operation at the project. This is a mine that's been around since Roman times, so one of the most important producers early on of pyrite. And that's, again, where we like the rich history of these projects we get into. We're de-risking our investment by going to areas where there's known mineralization, there's previous mining information available to us. It gives us a head start on the geologic model, and it gives us, in this case, a 6-level mine that currently is underwater and will dewater next year as a place to start building our next project. We've done 3 years worth of drilling now, 47,000 meters. And we've been able to go and validate and do some infill drilling on the existing geologic model that we inherited when we bought the project. I love to call it the Moby Dick. It's and once you say that, you can't help but see it. That is laying right over top of where the existing mine is. The green part is the indicated resources. Obviously, you can see with a greater number of holes, it's been drilled to the indicated level, and the bluish color around it, the inferred area. So that's what we've gone and validated over the last couple of years with our drill program. At the end of phase 1 in 2022, we came up with our initial resource just to see how we were tracking, what we were doing. We did a lot of twin holes to go back and validate the database, compare the new results to the existing data results. There was great correlation in terms of grades, so we felt very comfortable with the geologic model. So our geologic model now not only has the grades from the 47,000 meters of drilling we've done, but also been able to rely on some of the database to help round that out. We've got next steps planned. So now that we've got comfortable with what we know of, now we're going to start stepping out on the mineralized trend and go to the east and the west, and we've identified the areas in those 2 white outlined areas as the next place we're going to go. We're going to look for extensions of the veins, and we're going to look for adding mineralization in the next round of technical study. So at this point, what we're doing is taking the 11 million tons of resource that we know of. We're starting to work on our high-level economics. How are we going to process it? How much investment to process it? What are we going to generate? We think we're going to come up with 3 concentrates, relying on the fact that we've got copper, zinc, lead, gold, and silver. What can we sell? What will the off-takers pay? This is the work that's going on right now, and that's going to lead to a PEA that we expect to have ready early next year. And we're going to kick off the next 6,000 meters of drilling at the end of this year to start to add some tons to the resource. And then our third project, also in Spain, is in northern Spain. About a year ago, we entered into an option agreement to farm in on the Teruel project that's owned by Europa Metals. They're an AIM-listed company. They bought this project back in 2017, started doing drilling. There's been over 60,000 meters of drilling done up to the point that we entered into it. We can acquire 80% of this project by spending about $6 million over the next 4 years. We've already completed year one of the drilling. But before I get to that, the resource that Europa had come up with at the end of 2022 has 7 million tons in the indicated category, high-grade zinc, also good showings of lead and silver, and an inferred resource of 13 million tons, again, 6.5% zinc equivalent. So it's a great resource. We drilled another 11 holes this year, 7,000 meters, continued to get the same kind of results, more high grade, continuing to firm. So we're now planning the next round of drilling, which is going to allow us next year to do a short round to try and move more of those 13 million tons of inferred into indicated, and then we'll be proceeding the middle of next year into a PEA to take this project to the next step. And that should get us to the point where we can exercise our first option and own 51% of this project directly. So with 3.5 minutes to go, that's where we are with Denarius. We've got a short-term, mid-term, and long-term prospect of production. Cash flow is king for us, so getting Zancudo into production and allowing us to take that money, use that money to continue to forward the studies that we're doing in Lamero and at Teruel is an important part of the strategy. And we couldn't be happier with what's happening at Zancudo right now to be able to move ourselves forward from being more than just an exploration company. Production is key. So with that, I'll open it for any questions.